right. Well, even with the bid for treasuries and the U.S. dollar today, Bank of America's new Global Fund Manager survey sees falling demand for U.S. assets. It also finds investors are more underweight the dollar than they've been in 2 decades. Our next guest sees this as a potential game-changing moment for the greenback. Peter Boockvar is the Chief Investment Officer at Bleakley Financial Group. He's also a CNBC contributor. Peter, great to have you with us. You know,
Thanks,
with the spate of dollar weakness, we've talked about the U.S. potentially losing its status as a reserve currency, and people dismissed it. Are we at the moment where we say maybe this is actually happening?
I don't think so, but I do think we're going to see further diversification in the use of the dollar in terms of central bank holdings of the dollar, and that incremental change on the margin could result in a weaker dollar. But look at the dollar versus gold. Dollar is essentially collapsed versus the price of gold. So its question now is, what does it do against other fiat currencies? The dollar right now makes up about 58% of foreign central bank reserves. 25 years ago, it was 70%. I think it can probably go to 50%. But even at 50%, it can still hold its reserve basis. But I just think that the world has decided that it over-allocated to dollars in terms of the assets owned in the U.S. over the last 5 to 10 years. And now we're beginning to see, in terms of transactions, more global transactions taking place in currencies outside the dollar. And I think that that is a noteworthy trend that is more than just a 1 or 2 quarter thing.
Right. And then in addition to the dollar, it's also happening in U.S. Treasuries, according to Bank of America and their data for the first quarter. They've seen, demand lessen, and specifically from foreign holders and dealers. And I'm wondering if that makes this move away from U.S. assets more concerning, because it's not just the dollar where it's happening.
Right. That is part of it. But interestingly enough, foreigners have been reducing their allocation to U.S. Treasuries for more than 10 years. 10 years ago, foreigners owned 50% of the U.S. Treasury market. Today, they own about 30%. Now, they're still buying Treasuries, but they're buying less and less relative to the amount that's being issued. And at a time when U.S. has $2 trillion budget deficits, we need all the help that we can get.
Peter, last August it was dollar yen that was the trigger. What currency cross? Is it still dollar yen, at 144, potentially below 140? Is it the euro? What's the one that the market equity investors, traders should be most focused on?
I think the yen, because the yen will also go where JGB yields go, and where JGB yields go, U.S. Treasuries might go. There's a pretty tight relationship amongst a few bond markets around the world and some of their currencies, and I'll throw in gilts in there as well. And there's a common characteristic, and that is high debt levels and wide budget deficits. But keep an eye on the euro. An interesting article in the FT today from Christine Lagarde. She made the case that she wants the euro and believes that the euro is at a point in time where it can start to compete against the dollar in terms of reserve currency status. Not that it would become one like the dollar, but it can grow in prominence. So I would continue to watch that currency as well.
Peter, when you look at the dollar, talk to me about gold again. You mentioned it earlier on. When the Biden administration cut off access for Russia to U.S. dollars back when the war started, central banks started to increase their holdings of gold. Where do you think gold goes?
Yes, they've increased it to a large extent, to the point where the ECB had a paper last week that said that gold is now the second largest foreign central bank reserve holding in terms of value, and it just eclipsed the euro. I think gold goes much higher. I think it's already had a nice move, so I acknowledge that. I still think that gold right now is not just an inflation hedge or an anti-dollar trade. It is an important global reserve holding that I think still has legs to run on the upside, and we're long it as a result of that belief.